Hi there, welcome to Kneppy Invest. Hands up those who have never heard of the company Task Group. This is a listed company on the ASX. I believe it is a New Zealand based company, but it is a company on the ASX that I have heard no chatter about. No one's talking about this company, yet Task Group have released two profit upgrades in the past 8 months. Now, after the first profit upgrade, when they released their full year results in November last year, I was actually planning on doing a video on this company. And as I was doing the research, went to the website, went through a few of the presentations, I was just becoming a little bit frustrated trying to understand what exactly this company does. So I thought, being the person I am, I'll just put this video on the side and wait till the company releases their full year results in May. And then lo and behold, the company decided to release their second profit upgrade in April. So I thought, why not do the video on this company now? Why not learn a little bit more why this company has released two profit upgrades in the past 8 months? I'm going to describe Task Group as an enterprise transaction management company. I have no idea what that exactly means, but don't fret, because I did go to a few of the case studies they do have on their website, and then I really got some clarification about what Task Group does by an article that was written about, I think it was either June, July of last year, in regards to this company's biggest client, which is McDonald's. Now, this company was founded in 2000. I'm not sure if it was Task Group or another company called Plexure, because this company listed on the ASX in November 2020. So this company hasn't been around for that long, which is one of the reasons why this company hasn't had much chatter. And when you look at the charts, you can sort of understand why no one really cares about this company, because not only has the share price fallen significantly from when they listed, there's not much liquidity in this company. Now, when they listed, this company was known as Plexure with D code PX1, and then Plexure and Task Group merged. And for some reason, they decided they're going to take the name of the other merged company, Task Group. So they changed the name, also changed the T code to TSK. The market cap of this company at 37 cents is $131 million. The cash on hand is around about 22 million, which means the enterprise value of this company is $109 million. Now, onto my frustrations, trying to understand, and to be fair enough, I'm pretty stupid. I'm pretty dumb. Sometimes I just don't have any clue what a company does, even when they spell it out. But on their website, they do have a few case studies, and here is one of their case studies in regards to Guzmani Gomez, or GYG, why GYG picked Task Group to handle whatever they do. So GYG needed a platform that was built API first. The latest app leverages Task API for product menu, location data, trading times, product pricing, blah, 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 and more. Obviously, the Task transaction platform handles all enterprise transactional elements from location setup, clerk management, sticker printing, kitchen and in-store order management, natively integrated to the customer experience. So this company has something to do with apps, something to do with relationship between the company and its customers. And just by the customers this company does have, you do find a lot of these fast food restaurants like Guzmani Gomez, McDonald's, Retail Food Group. And I think it's all around that app and that platform they have in relation to the app. I don't think Task Group develops the app, but they just use the information in the app. I could be completely mistaken. So if you do use the McDonald's app, more than likely you are, or McDonald's is, taking advantage of what you're choosing on the menu, so they get to know you better. And that is building up the relationship between the customer for Task Group and the customer, so the McDonald's customer. So that's how I understand what Task Group is doing based off this one case study. So I got a little bit more clarification when I went back in time and found this article that was written in regards to McDonald's contract. On August the 1st, 2022, or around this time, the company did announce an extension to McDonald's contract. And McDonald's is Task Group's largest customer. The title of this particular article, McDonald's commit to Plextures. So at this point in time, they were just known as Plexture. They hadn't changed the name. Customer engagement and loyalty tech with 5-year extension. And I just like how this article was written. It was written for people like me who just don't understand what Plexture or Task Group actually does. So if you ever wondered how McDonald's knows what your favorite Macca's order is, it's because of their investment in customer engagement. And part of that is thanks to tech company Plexture, which has entered into a new 5-year deal to remind its customers how much they love chicken nuggets. The 5-year agreement continues Plexture's existing partnership with McDonald's Corp with its largest customer. The tech provided by Plexture is deployed in the McDonald's mobile app for customers across 66 markets, with the two biggest being in Italy and Japan. Through the app, this is probably the most important thing, through the app, fast food enthusiasts can order or make payments while Plexture collects custom-made data for marketing purposes on behalf of McDonald's. And the way I read that is McDonald's is trying to know their customer a little bit better through Plexture or Task Group's platform or the app. As I've already mentioned, Task Group will release their full-year results in May. So let's go back to November to look at the half-year results. And these aren't pretty numbers. So I can understand why the market wasn't that excited about this company up until maybe recently. So in the first half of financial year 23, and these numbers are in New Zealand dollars because, again, this company is sort of based out of New Zealand. Group revenue, 26.7 million. EBITDA negative by 687. Adjusted EBITDA, trying to get that number to be positive, up to $2 million, but they were unprofitable by $4.6 million. So not really pretty numbers there. However, you do get a little bit of a different perspective of this company when you look at the cash flow statement. And this is the cash flow statement from the half-year report. So instead of being significantly cash flow negative, in fact, Task Group was cash flow positive by a fairly large amount. In fact, they were operating cash flow positive by $10.1 million. Last year, they were operating cash flow negative by $7.8 million, and most of that cash went down to the bottom line. So, in fact, they increased their cash by $8.3 million from $12.2 million to $22.1 million because there was some favorable foreign exchange rates in there. So this company significantly increased their cash on hand. But again, why is there a discrepancy between the profitability of this company and the operating cash flow? And you can find that in note 12. So let's have a look at note 12 to discover why there was a big difference between the two. Perhaps one of my favorite notes in the financial statements is the reconciliation of operating cash flows. You'll find this in Australian-based companies, maybe New Zealand-based companies, not really American-based companies, because their cash flow statement is quite a bit different than the way Australia does the cash flow statements. And all you have to do is look at, say, Apple, Microsoft, Google, what are they called now? Alphabet's cash flow statements, and you can see it's quite a bit different. And reconciliation of operating cash flows is quite important because we can see why a company might be operating cash flow positive or negative and why it's going to be significantly, or it is significantly different than the profit or loss the company has reported. So in the reconciliation, what they do is they start at the profit or loss for the half year or the period, and then work their way down to get the operating cash flow. So Task Group started with a loss after tax of 4.6 million, but ended up with operating cash flow of 10.1 million. So how did we get there? The majority of times it's because of movements in working capital. So we're talking about changes in trade receivables, inventory, trade payables, and for Task Group, changes in deferred revenue. And that was a significant factor for Task Group. In fact, that added $12.2 million to their cash flow. So deferred revenue is just some revenue they've received that they haven't done any work at the moment for. Also, you have to look at amortization and depreciation, which is up the top. These are adjustments for non-cash items, and amortization for Task Group in the past half year was fairly large at 5.6 million. And more than likely, that amortization was because of the merger between Plexture and Task Group. So you do, in my opinion, have to take that take that into account. So even though this company was loss-making by over $4 million, I don't think the financial performance of the company was that bad. And I don't think being operating cash flow positive by $10.1 million, the company's performance was not quite that good. But first, let's go back to August the 1st, when that article that was written that gave me a little bit more clarification about what this company does. This was when they first gave a bit of guidance, profit guidance for financial year 23. And not only that, because the company upgraded, or not upgraded, but continued this contract with McDonald's, the market was really excited. In fact, the share price rose 72% on the back of this announcement. The most important thing here is their guidance for financial year 23. So they were expecting revenue to be around about 56 million New Zealand dollars, and also expecting EBITDA, or adjusted EBITDA, to be around about $3.7 million. So those are the two numbers we want to remember as this company issues profit upgrades, which they have done twice since this particular announcement. The first profit upgrade was when they released their half-year results back in November. This was a really nice profit upgrade. So instead of, what was it, $56 million in revenue, they now expected revenue to be between 59 and 62 million, which was an increase of 11% on the previous guidance, but adjusted EBITDA going from about 3.5 million up to 8.5 to 9.5 million, which was a 157% increase on the previous guidance. And this is a pretty significant profit upgrade, in particular, the adjusted EBITDA. So this is telling us the company is doing better than what they thought previously, only 3 months prior to this. And they also mentioned that one of the reasons behind this increase in confidence about the performance of the company was the impact of the new terms with McDonald's and other contracts executed throughout the first half of financial year 23. Now on to profit upgrade number 2 and the catalyst behind me doing today's video. And for those who don't know, in my opinion, profit upgrades are the most powerful type of announcement a company can release. You could argue with me, unsuccessfully, that a takeover bid for a company is the most powerful because that's when you see the most significant type of price rise. But whenever I'm holding a company and there is a takeover bid, I will automatically sell. But if I am holding a company and the company releases a profit upgrade, I will never sell out of that company because, again, profit upgrade, particularly if there are numerous profit upgrades, if they're in a profit upgrade cycle, I won't sell because more than likely the share price and the valuation of that company will rise. Not always the case, but that is generally true. Now on to this profit upgrade number 2. So again, they've increased their expectations in regards to revenue and adjusted EBITDA. Now they expect revenue to be 65 million instead of between 59 and 62 million, the expectations back in November. And now they expect adjusted EBITDA to be around $12 million, significantly higher than the last guidance, between 8.5 and 9.5, and significantly higher than their expectations back in August, which was around about 3.5, we'll say 3.5 million or so. So their expectations for adjusted EBITDA have risen from 3.5 million to $12 million in about 8 months. And the reasons behind this profit upgrade, there's a little bit of ambiguity here, a little bit of vagueness. The improved performance above the guidance range is driven partly by a post-balance date reconciliation required under certain key customer contracts. Maybe they're hinting that this is revenue or something, or revenue or whatever they were expecting next year, but they're going to get this year. Maybe that's the reason behind this profit upgrade, but they do say driven partly by. And maybe this company is just performing really well above management's expectations back in November and August of last year. And the other really important thing here is the company's cash position has grown to $28.4 million, up from $12.2 million 1 year ago. Now to the chart for Task Group. I keep on wanting to say the Task Group, but it's just Task Group. Now, this company listed on the ASX, when was it? Late 2020. And from when this company listed on the ASX all the way through to July last year, just before they announced or released that announcement in regards to McDonald's contract, the share price was in a well-defined downtrend. You can see the start of this particular chart, share price was moving down. In fact, it fell all the way down to 12.5 cents in June last year before we started to see a little bit of a rally, which is understandable because remember, the overall weakness or low point in the market was June last year. Then the company released that announcement in regards to McDonald's contract. Share price rose 72% on that day, and that was a catalyst for the end in the downtrend of this company and a shift in the sentiment. And since then, the share price has gone sideways. Now, the share price has really struggled to get above 40 cents. In fact, it's hit 40 cents about 4 or 5 times since July or August last year. And right now, the share price is on 37 cents. So I'd love to see the share price get above 40 cents. That would be a fairly bullish move. Now, the shares traded in the last 2 trading days after they released this second profit upgrade has been quite intriguing. Really high volume compared to the historical volume for this company over the past year, year and a half. So that is telling us that the market or participants in the market are getting a little bit excited about this profit upgrade number 2. Now, one of the problems with Task Group is sometimes the shares are fairly liquidly traded. In fact, not sometimes, it seems like all the time the shares are fairly illiquidly traded. And that alone will force a lot of investors to refuse to buy into this company. Maybe this is a catalyst for increasing interest in this company. Maybe now we'll start to see volume increasing. And if we see volume increasing at the same time as the share price increasing, as it moves into an uptrend, that would be a fairly bullish sign, particularly if this company keeps on releasing profit upgrades and maintains being profitable. I'm assuming they're going to be profitable in financial year 23. So let's hope so. And if they can do that, no doubt share price could keep on going up from here. That's all I have for this first look at Task Group, a company that has released 2 profit upgrades. I might have been mistaken. I think I said 2 profit upgrades in 8 months, but it's actually 2 profit upgrades in about 5 months. The first upgrade was in November, late November, and the second upgrade was in April. So things are moving in the right direction for Task Group. The next thing we want to see is a share price to be moving in the right direction. And in that case, we'll be looking for a breakout above 40 cents, above that pretty strong resistance level. If you have any questions about Task Group, anything I've mentioned in today's video, I'd love to hear your opinion. So leave your thoughts, your opinion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.